said, given where the crypto surge is in the West today, globally, with the adoption both by financial institutions as well as previously reluctant corporations, and here in India as well, post that Supreme Court order, which had struck down the RBI 2018 circular, saying that it was not proportionate in its action, do you believe that perhaps it is wrong at this point in time to have a blanket ban on cryptocurrencies? Or do you still stick with your previous recommendation that there should be a ban?
See, I think there is a big confusion going around all over the world about the cryptocurrency as currency and cryptocurrencies as assets. The bill which was drafted in 2019 dealt with cryptocurrencies as currencies. You know, currencies are used for making payments, for doing all transactions and all, and that requires a stable value for that particular currency to have. The cryptocurrencies of the today, Bitcoin or whatever else, do not have any stable value. They cannot be used as currencies. The currencies have to be managed in a way that its supply is in line with the demand. If it happens to be supplied by anyone at any rate, that currency cannot discharge the function of currency. And therefore that bill was correctly drafted to ban the use of cryptocurrencies as currencies. And I stand by that even today.
Okay, so you're saying, and we're yet to see what this version, the 2021 version of the bill is going to put forward, but we're given to understand that it is likely to propose a blanket ban on all cryptocurrencies, whether as a currency as well as a store of value is something that we will have to wait to see. But Mr. Garg, you know, do you believe that the government should continue with the approach that the 2019 bill had taken? Do you believe that that's the right way to go?
So the difference, I think, which we can think, taking into account the subsequent development which have taken place, is that there is a fascination in the world about the crypto assets, cryptocurrencies as assets. A lot of people see value in that. I don't really believe what kind of value they see it, but it's their judgment. And they see value. One can have a judgment about whether gold or platinum has value or diamond has value or not, even if it is physical. Or similarly, the Bitcoins or the Ethereums has value or not, even if it is invisible. If there are people who are sort of willing to make investment into this asset called cryptocurrencies, and I would better term that as crypto assets. I think considering if you can allow betting, for example, to go on, so you can even bet on crypto assets. So crypto assets as assets perhaps can be one area where the government can look at, but with lots of caveats. You have to protect the small sort of investors from this. Only the people who understand and has ability to take that risk might be allowed. But as currencies, I think that confusion, if you can end between cryptocurrencies as currencies and as an asset, I think maybe there is some way to allow doing it or it's being used as a kind of risky or whatever kind of asset it is.
Bitcoin down today, but up 26% just this week alone. A week that saw, by the way, both BNY Mellon, America's oldest bank, and MasterCard, one of the biggest payments networks out there, announced they intend to begin using or in some way administering Bitcoin this year. And CNBC.com reporting that employees at JP Morgan Chase have been asking when their turn will come. CNBC.com banking reporter Hugh Son joins us now with more on if and when a big bank might give Bitcoin that breakthrough moment. It's one thing when it's a custody bank servicing assets for clients. It's quite something else when it becomes a part of the traditional banking system. Right, Hugh?
Yeah, no, Dom, how are you? And happy year of the ox to you, my brother. So look, when you look at what came out of Boney Mellon, I mean, if you look at JP Morgan's businesses, they have a custody, right? You look at the news from MasterCard just yesterday or 2 days ago, I forget, they also have payment rails as well. So you're seeing different parts of the ecosystem, and banks, being the most heavily regulated, they're the most complex. They're also the most crucial to our U.S. economy because they have so many different business lines. They have asset management, retail banking, obviously big corporate investment banking, Wall Street banking divisions. And so it would be a huge stamp of legitimacy for the asset class, this nascent asset class, if a JP Morgan or if a Goldman Sachs were to get involved.
Who is pushing for this? I alluded to the fact that it could be internal employees. If it is internal employees that are pushing for this, how are the executives at these organizations answering some of those questions from employees?
It's a good question, Don. So, as you know, there is a groundswell, okay? And look, even in the 2 weeks or so that I've been looking at this story and trying to get insider information about this, Bitcoin went from 30,000 to almost 50,000. There was a more than 50% increase just in the 2 weeks I've been researching this story. It is insanely volatile and insanely, surging at the moment. And so when you have that kind of price action, naturally, you think about the makeup of a Wall Street trader. They look at these charts and they want to get involved. They want to get involved because, making markets in something that has this level and has these characteristics should be profitable if you can handle the risk. So, the town hall that I reported on, the JP Morgan town hall, they engaged on this. They had to. There were scripted comments, between the head of the CIB, the head of the Wall Street division, and the head of markets and trading. And they brought it up and they discussed it. And, they were, for the most part, open-minded about it. Now, when I specifically asked them about this, because I'd heard wind of this, you had Daniel Pinto actually just say, basically, look, when this is a mature asset class, or when it's as a maturing asset class and everybody else is dealing with it, we have no choice but to deal with it. And it's more likely than not that they will eventually grapple with this.
Both MasterCard and BNY Mellon gave Bitcoin prices a shot in the arm, sending the digital asset up more than 8% intraday to a new all-time high of 48,663, and that's above the previous record set just on Monday as Tesla made a big bet on Bitcoin. MasterCard has already partnered with crypto card providers, but was previously requiring digital conversion before it would process. Now it plans to make the process a lot easier, focusing on stable coins, which peg their value to the dollar. Bank of New York Mellon said it will hold, transfer, and issue Bitcoin as well as other cryptocurrencies for institutional investors. Again, all of that helping to accelerate the momentum in Bitcoin. Interest in cryptos, as we mentioned, accelerated on Monday. You can see in the Bloomberg, that's when Tesla CEO Elon Musk made a huge bet, saying that Tesla would be investing $1.5 billion in the digital coin and will begin accepting it as payment. You can see Bitcoin taking off for the moon, even as the rally in Tesla shares has calmed down. And many Bitcoin supporters believe it's this kind of mainstream acceptance that presents the perfect storm to send the currency higher, even though JP Morgan Chase says many other firms are unlikely to take the bet as bold as Tesla's. Paul?
Yeah, Bitcoin has plenty of supporters, Sue, but plenty of detractors as well, among them a key banking regulator. Tell us why Sheila Bair's not buying it.
Oh, real quickly, Sheila Bair is a former head of the FDIC, Federal Deposit Insurance Corp. It's known for those early warnings on the subprime mortgage crisis. She's now warning about Bitcoin, saying it's at nosebleed levels and its volatility gets in the way of its usefulness. She also said to Bloomberg Radio, stay away from it. Fine for wealthy people to dip in and take the risk, but she doesn't have a lot of faith in it. And again, if you look at the Bloomberg, you can see what chart watchers are saying, that the technicals indicate the bullish momentum is setting up for Bitcoin to go even higher. Meanwhile, Janet Yellen recently warned that misuse of cryptocurrencies is a growing problem. She is now, as you know, the Treasury Secretary.
Joining us now, Meltem Chief Strategy Officer at CoinShares. A very good afternoon to you. Thanks so much for joining us. Let's pick up, first of all, on the sort of final point there that Max was talking about. How far away are we from Bitcoin actually being used to make transactions for products, it becoming a genuine currency of exchange?
Great to be here. I can't believe it's the end of another week. I'm happy that markets close at 4. Crypto markets don't close. So sadly, I've got a whole weekend of this ahead. But look, I think Max Levchin's comments are spot on. Historically, a lot of the engagement around Bitcoin has been really more around the store of value narrative and people buying it as an investment asset as opposed to a functional medium of exchange. But that's starting to change and really rapidly. On a daily basis, there are over 1 million active Bitcoin wallets on the Bitcoin network. Now, a lot of them are transacting on trading platforms and other sorts of applications more related to financial use cases. But with the advent of the Lightning Network, which is a payment network built on top of Bitcoin, and with the advent of stable coins or dollar-pegged currencies that are built on top of public blockchain networks, we're seeing a lot of activity that is more transactional in nature, and it's changing really, really quickly.
When you see more corporate stories like we saw this week, MasterCard and BNY Mellon exploring ways to at least be able to process transactions, Tesla going further, actually buying Bitcoin, do you fear in any way that marks at least a short-term top in the price of Bitcoin?
No, I actually don't feel that way at all. As Elon Musk so famously said, in hindsight, it was inevitable. Look, at the end of the day, companies are in the business of making money. And I think, again, what Max Levchin said so well is if there's money to be made here, businesses have to pay attention. One really telling market event we'll have is Coinbase will IPO in the near future. It will be, when listed at its predicted $70 billion valuation, roughly the 7th largest bank in the United States by market capitalization, despite having a fraction of the assets under management of its peers in the traditional finance space. And there is a shift towards digital. Content is king, but distribution is queen, and she wears the pants. So it's all about distribution channels. And at the end of the day, the way that financial products are distributed is also changing really rapidly. Look at Robinhood, look at new fintech platforms, but also look at Amazon and Facebook and Google and Walmart getting into the game and distributing financial services. IKEA launching a credit card. I mean, it's not just limited to financial services. This is really about a fundamental shift in the way that products and services are being distributed, and Bitcoin and digital currencies, in my view, are a huge part of that story, and we're just now seeing the beginning of this story unfolding.
When it comes to companies, Meltem, I feel like we're talking about two different issues. There are those like Tesla that are actually converting cash into Bitcoin on the balance sheet, and then others, many others, accepting it as a service, which is a difference. I don't understand why a company would do the cash thing. I get the services. They want to participate in the growth and go where the consumer's going, and if there's interest, get in on it like PayPal. But why would they actually do that to their cash assets? I mean, wouldn't that be a huge risk?
So look, I was a corporate treasurer at ExxonMobil when it was still one of the largest companies in the world. And right now we're looking at 2.6% real inflation. Rates are at 0, and treasurers need effective portfolio diversifiers that are going to drive return. As they're looking at the universe of alternatives, there are a number of options out there, and Bitcoin is an attractive one. In addition, I think the question is, what will the multiple value accretion be for people who allocate their treasury assets to Bitcoin? In the case of MicroStrategy, that's a very extreme approach to allocating to Bitcoin, but the multiple is there, and that firm and its leadership has really benefited from that move. Same thing that we saw with Square. Tesla, the reaction was maybe not quite the same. But as we see more and more examples of different firms allocating their treasury assets to Bitcoin, the real question for me is, what does that mean? Does that have an impact on multiples that investors and allocators assign to these businesses? And if there's a positive effect there, I would expect that that strategy would be replicated across the entire S&P 500.
I want to thank the City of Miami Commissioners for supporting my resolution, which directs the city manager, after analysis, to procure a vendor to be able to offer our employees to get a percentage of their salary in Bitcoin, allows our residents to pay for fees in Bitcoin, and also would allow the city manager to cooperate with Miami-Dade County to allow for taxes to be paid in Bitcoin. It also requests of the state legislature that the City of Miami supports efforts to make Bitcoin an acceptable currency for us to potentially invest in the future. It's wonderful to be a very crypto-forward city in the City of Miami, and I want to thank my commission colleagues for allowing that to happen.